Assalamualaikum and a very good morning to all and our sir. Okay, so I'm Nur Azrin binti Kamarun Zaman from Group 4. Will be present the solution for question number 1. Question 1. Great Berhad is a public company listed in the food and beverage sector. It produces and markets packaged foods and soft drinks. The company acquires control of companies in the construction, healthcare and technology sectors to diversify its business risks. So for the question of 1A, investment in Big Berhad, we need to find the bargain purchase or goodwill. So Great Berhad acquires 75% of ordinary shares in Big Berhad, a construction company, for 960 million on 1st January 2018. When Big Berhad asset revaluation reserve and retained profit was 108 million and 100 million respectively. So based on the question, 75% is the parent control on Big Berhad, so that will make the NCI percent, which is 25%. Okay, 960 million will be the consideration transfer by cash. And then asset revaluation reserve and retained profit, which is 108 million and 100 million respectively, will be the fair value net asset on the date of acquisition, which is on 1st January 2018. Okay. The fair value of Big Berhad net asset on the date of acquisition was equal to the carrying amount. For the year ended 31st December 2021, the goodwill from investment in Big Berhad has been impaired by 10%. The impairment loss has yet to be adjusted in Great Berhad's books. Okay, so as you can see in the question, it already mentioned that the goodwill from investment in Big Berhad has been impaired by 10%. So when we calculate the bargain purchase or goodwill, we need to get a goodwill. So if you get a bargain purchase, then your answer must be something wrong somewhere. Okay, so as you can see in this slide, first we need to do a three column. First column will be goodwill, second column will be the NCI portion, and the third column will be the group retained profit. So for the Big Berhad, cash consideration transfer will be 960 million as in the question, and then we need to add the NCI portion, which is 25%. How do I get 25%? The parent control in subsidiary is 75%, so you minus with 100%, you will get 25%. And then we need to times 25% with its fair value net asset on the date of acquisition, which is from ordinary share capital of 1050. This one you can get inside the statement of changes in equity at below. And then you need to add retained profit of the subsidy, which is 100 million inside the question, and then 108 for the asset revaluation reserve. Also you can get inside the question. So add these three and the amount will be 1,258 million. So you need to times with 25%, then you will get the goodwill portion of the NCI portion of goodwill will be 314 million 500,000. Okay, then you need to add 960 and 314.5 with you add that two, and then you will get 1274.5. Then you need to minus the fair value of net asset, which is 1258. So you will get a goodwill amount 16.5. And then in the question has mentioned that the goodwill will be impaired by 10%. So you need to minus 10% from the 16.5, which you will get 1.65. And then when you minus, so the end answer will be a goodwill of 14.85. Thank you.
Assalamualaikum. My name is Nur Azra binti Azlan. I will present about Asal Berhad's questions 1. So, investment in Asal Berhad. On the 1st January 2020, Great Berhad acquired 60% of ordinary share capital of RM 45 million of the 8% debenture of Axel Berhats, a healthcare company, for the cash considerations of 322.5 million and 45 million, respectively. On the date of the acquisitions, the asset revaluation reserve and returns profit of Axel Berhad were 72 million and 117 million, respectively. The fair value of the asset Axel Berhad freehold land was 3 million over its carrying amount. At the date of acquisitions, Axel Berhad has not adjusted this amount to reflect the fair value in its book. On the 1st January 2020, Great Berhad acquired another 20% of the ordinary share of Axel Berhad. The considerations amounting up to 67.2 million was paid by issuing 12 million new shares. Great Berhad has not recorded these transactions on the date the fair value identified net assets of Axel Berhad was equal to its carrying value, except for the unadjusted fair value for the freehold land as mentioned above. For the Axel Berhad consideration transfer cash is 322.500 million. For the NCI, 40% times with 492 million equal to 196.8. For the goodwill, for NCI is 196.8. Then for the OSC is 300 million. For REDOA is 117 million. For the asset revaluation reserve is 72 million. For the revaluation reserve is 3 million. So 519.30 minus with 492, we got goodwill for the Axel Berhad is 27.30.
Hello and Assalamualaikum. Hi, my name is Zeti Ain binti Ahmad Tarmizi. I will be answering question 1A in regards Big Berhad investment on Good Berhad. Since Big Berhad is the subsidiary of Great Berhad, this acquisition is an indirect acquisition. In the question, Big Berhad acquired 65 out of 75 millions of Good Berhad shares. To this, if we convert to percentage, it will be 80%. Because this is an indirect acquisition, NCI need to be calculated differently. First, we will take 75%, which this is the percentage when Great Berhad acquired Big Berhad share. And then we will multiply it with 80%. 80% is the percentage acquired in Good Berhad. This will equal to 60%. From there, we will minus 100% to 60%, which left 40%, and this is what we use to calculate NCI. After that, we will look for total FV&A. Total FV&A includes OSC, RE, and ARR. If you look at the slide, we will be calculating the indirect 75% times RM 180 million. And also we will be calculating 25% times 180 million. The 75% times RM 180 million will be added together with NCI of 40% times total FV&A. After we got the total amount, we will deduct total FV&A, which the result we will get a goodwill of RM 39.82. That's all from me. Many thanks and have a good day.
Assalamualaikum warahmatullahi wabarakatuh. I am Nur Sharina binti Adina, and today I would like to discuss about the question 1B, which is how to calculate the gain or loss for the second equation in the Excel Berhad. From the question, on the 1st January 2021, Great Berhad acquired another 20% of the ordinary share in the Excel Berhad, which is accumulated to 80% of Great Berhad acquired share in Excel Berhad. The consideration amount is 67.2 million by issuing 12 million of ordinary share. This transaction has not been recorded yet. Okay, this is how to calculate gain or loss of second equation of the subsidiary account. We need to take the consideration transfer minus with the net fair value net asset on the equation date. The fair value net asset on the equation date we need to calculate, and then after that we need to multiply with the percentage of increase in the shareholder. As you can see in the table above, from the table we can see how to calculate gain or loss of second equation in the Excel Berhad. Great had acquired another 20% of ordinary share in Excel Berhad, which is amount 67.2 million, which is shown by 12 million of ordinary share. The consideration transfer for the second equation is 67.2 million, and we minus fair value net asset on the equation date, which is 1st January 2021. Ordinary share on the 1st January 2031 is 300 million. Return earning date of equation is 119.4 million. Asset revaluation reserve on the date of equation is 72 million. We plus with the 3 million exit in the freehold land. We got the total amount is 494.4 million. And we need to multiply with the percentage of increase in the shareholder on that date is 20%. We get 98.8 million. 98.8 million we will put in the non-current interest as the change in shareholder in the Excel. After that, we need to calculate gain or loss of the second equation. Consideration transfer minus of 67.2 million minus with the fair value net asset on the equation date is 98.8 million. We get the gain on 31.68 million. 31.6 million we're gonna put in the group retained earning of the year. From the calculation, Great has acquired gain in the second equation in the Excel Berhad. Thank you.